This is Agriculture Today, and I'm Shelby Varner with the K-State Radio Network. Glynn Tonsor, K-State livestock economist, begins today's show as he talks about the cattle market and how consumer demand for beef has historically changed. He also takes a look at the meat demand monitor. K-State Extension agronomists Logan Simon and Tina Sullivan continue the show as they discuss corn planting and what they are already seeing across the state and what they expect moving forward. Ending the show is Justin Waggoner, K-State Extension beef cattle specialist, as he explains how starch breakdown can be impacted by its processing. That and more is coming up ahead. You're tuned in to Agriculture Today, and we start our Monday show with the cattle market update from K-State livestock economist Glynn Tonsor. Glynn, thanks for joining us today.
Oh, my pleasure, and happy post-Easter. Hope everybody had a blessed holiday.
Glynn, while we're looking at this cattle market, what are we seeing for cash?
Yeah, this past week we had a recovery, and I'm going to purposely pause and get a little broader than just this past week immediately. Is the last few weeks have been very choppy in the equity and the broader commodity markets. And specific to cattle, it was nice to see a kind of a continuation of a recovery. There's been examples of risk-off in commodities and so forth from the Middle Eastern disruptions as well, I'm reminding us of. And I hope this calmer waters recovery in the cattle market continues. But this past week, we also had a shortened week, again, because of Easter. So USDA called the 5-market cattle market Thursday at 245. Which would be up, slightly from the week before. Kansas feeder cattle was $8 to $15, and I actually took note of a couple cases that were more than $15 higher. So definitely a stronger tone in the feeder cattle market. 2 lots, just of reference. A lot of 128 head weighing 481 went for 553, and then a smaller lot, 96 head weighing 623 went for 445. Both of those would be continuing increases over the last couple of weeks. And that strong tone also showed up in the CME futures contracts. So again, we had a shortened week. Thursday's close, April, 246 on live cattle is up about $10 compared to the week before. And then April feeder cattle closed at 373 and was up about $11. So to put a bow on that, the cash fed cattle trade wasn't quite as strong, but it was okay. Everything else was up, 8, 10, maybe even $15, depending on what example we talk about. And it was nice to see that ongoing recovery.
Are we seeing any of that strength when we look at boxed beef?
Not yet, specific to this past week at least. So choice was $390, down about $3. Again, we're comparing Thursday to the Friday before. And then select was $388, down about $2. And I will interject there is we would like to see, historically at least, a little bit wider choice select at this point. February, even early March is when we tend to see that narrowest. And for those that follow me, that's a $2 differential at the moment. There's examples of $40 and $60 at these levels differential going into grilling season. And we are still on the front end of grilling season for most of the country. I don't want to overreact to this, but historically analysts look at the spread as an indicator of consumer demand. And I think it's going to be worth watching that. We have more information than just choice select to look at for consumer demand, of course, but I need to put a pin in that point is it's narrower than it would normally be at this time.
And while we're thinking about beef price, looking at past years, what are we seeing when it comes to price versus what people are willing to pay?
Your listeners here know that I'm one of several on a rotation, and LMIC, Livestock Marketing Information Center, is also some of the folks you regularly engage with. And just quick shout out, a lot of the information I use comes from them, and it actually starts with USDA, and then LMIC aggregates it and puts out nice figures and so forth. And you and I are looking at a couple of those. Why am I doing that? We now have a full, complete, cleaned set of 2025 data to reference. Some of those things come out a lot sooner than others. And the punchline, and the reason it's in our notes feed and I talk about, is 2025 followed 2024 in being unique historically. And what I mean by that is the average American, so average resident, consumed more beef per person in 25 versus 24, and the inflation-adjusted beef price that we get from USDA still increased, specifically increased over 7%. And we had a marginal increase in consumption per person. That only happens if you have strong beef demand. That occurred similarly in 24 versus 23, so this isn't necessarily new. We're actually in now 3 years into a strong beef demand, like year-over-year growth story. But I'm trying to plead with the general public, and that's what I'm doing with you right here, is have better appreciation that strong consumer demand has actually been the leading role in higher cattle prices the last couple of years. Fewer cows and so forth has a role in this discussion, but it is not the leading thing at all. It's actually more to the supply discussion than just cows. But even beyond that, the consumer demand drive is really critical. It's my job to say that, but just understanding the market and kind of appreciating why we have these historically high levels, that's really important, kind of education 101 point.
Have you seen things that have encouraged consumer demand when it comes to beef?
So I think beef is benefiting from the broader, protein is in, people want more protein, that's good for meat. But specific to beef, I think the perception of its taste profile has improved. Certainly the consistency of the perception of consistency has improved. And you don't get either of those overnight. I mean, I want to impose here is there's lots of ways to produce cattle, right? Lots of different genetic and management decisions. You can choose how you market them, right? The feedlot packer interface, different ways to market cattle. And we tend to see a more grading prime, upper choice, which is consistent with quote unquote higher cattle quality, which directly aligns with what we understand about desires from the consumer. And when you get the product to match what the public wants, markets tend to reward those that are doing that. And I think the cattle industry and the beef industry have collectively gotten a lot better at that over the last 20 years. And quite simply, the last couple of years have gotten some fruits for that labor.
And Glenn, wanting to talk about the meat demand monitor, as always, when you're in. And first off, kicking off with what's the willingness to pay for people when we think about retail versus food service?
Yeah, and Shelby, you're referring to the March MDM report. Again, to hold the hand of our listeners for a moment, I made the comment we get lots of different demand insights from different places. LMIC is helping us understand those annual trends from USDA data. The Meat Demand Monitor, which is based here at K-State, beef and pork checkoff funded, is a consumer survey-based effort, and every month we put out these base reports. Now that we're here early in April, the most recent information we have is for the month of March. So to tee all this up, and one of the things we get with the MDM, as you said, is different looks by market channel. So how are things in the retail? So think grocery store for at home versus food service, and specifically the dinner meal away from home food service. And the demand patterns were definitely mixed in March. First with the good, the food service demand side, all our metrics were up. So there's 8 different categories we're tracking each month there. And in all 8 cases, the representative or the mean U.S. resident appears willing to pay more for a dinner meal away from home in March than it was February. And quite honestly, we need to see more of that for some recovery in the food service channel. We can come back to that if you want. But it was offset by a bearish point, and that is 6 of the 8 things we track for retail. So think for at home, we're down in March compared to February. So there's largely just a one sector gained, the other one lost kind of story here in March.
So why are we wanting to see more recovery in the food service?
Well, I just want, demand for the industry to grow in general, right? And I'm highlighting one of the channels, food service specifically, has a couple years of more challenge to it. There's examples where the retail channel has carried food service. It's more than offset weakness in food service. One of my growing concerns, particularly in the middle of our Middle Eastern disruptions with higher gas prices and macroeconomic disruptions, is if the public gets more pessimistic about their finances, and we're going to get that here in a minute, and there's some examples of that, they become more price sensitive. And one of the things they do when they become more price sensitive is they go to restaurants less. So that can hit food service, restaurants channel more than grocery store. It's nice to see March numbers were up, but I'm trying to put a pin in this is we need to see it for a few more months.
And thinking about price, is that becoming maybe a little bit more important for what people are thinking about when it comes to purchasing protein?
On average for the country, yes, it is. So we have something we call protein values in the MDM, and we put a list of 12 things in front of folks, and price is one of those 12. And we ask, what are the 4 most important factors in your decision to buy or not buy protein? I always have to say taste and freshness, regular, the most important. So just put a pin in that. That's really important. I think that's favorable for the beef story we talked about earlier. It's also why the pork sector has its Taste What Pork Can Do campaign that's fairly new. They're pinning into the most important factor. But price is the third on that list of 12. And, as I noted here in our notes for you and I to bring up, it is growing. This is the 3rd month in a row we've had an increase in the role of price compared to several of the other factors. And I think that's a macroeconomic concern that's showing up. So we're seeing a decline in environmental impact, origin traceability, animal welfare, use of antibiotics and hormone-free are the 4 we see deterioration in the relative importance for the typical U.S. resident. And we're seeing some increase in price sensitivity.
And staying on this price train, how are people feeling about their household finances?
The price train. I love that, Shelby. So we track the household financial sentiment, very similar to what the University of Michigan does. They put out their consumer sentiment index survey that's more broad. It's not meat specific at all, but our listeners are probably familiar with it. And one of the things they do is how are your finances, household finances today compared to a year ago? Are they better? Are they the same? Are they worse? And we've, for quite a while, reported that out regularly. And here in March, we conclude that 16% of the public say their finances are better than a year ago, and that's great for them. The most common response is 48% tell us they're the same, so materially no big change. But unfortunately, over a third, specifically 37% of the public, tell us their finances have weakened, this March compared to March of 2025. And what's important for the meat community in that, and I've alluded to that already a couple times today, is we see a shift in food market channel. So you pull back on expenditures away from home more. Okay. And then real narrowly within the meat space, if you tell me your finances are worse than a year ago, you're less likely to tell me you had beef in one of your meals yesterday, or you're more likely to have it in fewer than somebody else. And the same comment holds for pork and chicken, by the way. It's not, unique to beef, is folks put meat protein in their diet at a much higher, more frequent rate if they think their finances are improving, because there's this macroeconomic, consumers income effect, wealth effect makes you more able and willing to continue to spend for meat protein. And that's really important. That's not new. Here in 2026 it applies, but I would have said that if I was talking to this audience in 1966. That's a new, just fundamental point. But the MDM helps us track it. And I'm trying to connect it for our listeners. The disruptions in the Middle East are just the latest thing that put us kind of concerned about that financial sentiment, and it's important to watch it.
Glenn, I appreciate you taking the time to join us today.
My pleasure, and I hope everybody can have a great April.
That was K-State livestock economist Glynn Tonsor. We're cutting to a short break now, but stick around because we have more for you up ahead. You're tuned in to Agriculture Today, and we continue our show discussing corn planting with two K-State Extension agronomists, Logan Simon and Tina Sullivan. Logan, Tina, I appreciate you both taking the time to join us today.
Thanks for having us on.
Yes, thanks, Shelby.
When we're thinking about corn planting, what is one of the most important things for growers to keep in mind?
Honestly, it's the same thing as what we would recommend for all crops, and that is being mindful of your soil temperature and your soil moisture. And I think we can all agree that this year is weird. Been an odd one. Corn and soybeans actually both share a minimum germination and early growth temperature of about 50 degrees Fahrenheit, which we have definitely reached. However, we also know that our uniformity and good stands are made really when we're up above that 55-degree threshold. So making sure we're high enough on that front. The other thing, however, is in a year like this, when we hit these high temperatures early, we have to remember just how volatile our temperatures are across the state of Kansas, because we may have soil temperatures hitting what we recommend for planting, but our crops are both are still very susceptible to a late freeze. In the case of corn, injury on corn is most likely when we are in that really seedling stage, that very early stage, and then up beyond like that B5, B6 stage, which would mean to be that at that point and still get a late freeze. That would be some very early planting. But it has to do with the placement of that growing point relative to the soil surface and susceptibility to freeze. So some of the same conversations we've been having right now in the state around the wheat crop in terms of where that growing point was when we had that freeze injury. So all of these things, are we warm enough on the soil temperature side? Have we seen our last freeze? Need to be playing a role as we're thinking about getting this corn crop in, rather, here in 2026.
As we're thinking about getting this corn crop in, Tina, as you've been around the state a little bit, is there some corn already coming up?
So there is some corn coming up in the deep southeast, which they tend to be ahead of the curve when it comes to planting. It's been warm down there. They've kind of been catching some timely rains, and when I was driving through yesterday, I saw maybe it's the one field, but there was a field of corn emerged and up. Can't say, we're just in the emergent stage. There's not a whole lot, clearly not a whole lot of leaves, and I was looking at it going 65 miles an hour down the road. But corn is up in the southeast, plus there's other fields that were planted into corn. And then even thinking into typically thought of that's the southeast, of course, they're ahead of the game. We have two real good windows. We either got to go in early, we got to wait a bit, and then go in late because of those temperatures, and trying to time when our tasseling and silking will be for that corn crop later in the season. That's really why we work with planting dates, is we move them as much as we do. But then even up into the northeast, Donovan, Atchison, Brown, going over down to Leavenworth, even over to Pottawatomie County, they're rolling as well.
Logan, Tina mentioned what she's seeing across the state for people getting in the fields and getting planted. And so how do those recommended planting dates look across the state?
Yeah, absolutely. So there are different schools of thought around planting dates for corn, and they've really been evolving as we've seen the evolution of some different hybrids, and seen more corn, just frankly more corn out across the state of Kansas. So another early corn early region for us is the South Central area. South Central Kansas tends to be one of those areas where we can make a really big crop and potentially burn it up if we are pushing that grain fill period into a drier time where we get a lot of heat and we run out of moisture. So early corn, early maturing hybrid, early is generally a winning practice down there. Thinking about that Hutchinson, McPherson, Great Bend, and South. As you get, however, up into more of north central Kansas and then certainly out into the west, we've been seeing greater flexibility out there in terms of what our planting dates can look like, especially on that dry land acre. And so we've seen more and more corn acres shifting to a later planting date with some pretty good results. And some K-State data has really supported that for that broader north central, northwest, west central area, where we have had success even pushing a medium maturing corn hybrid down into that later May and even into early June in those timeframes. However, when it comes to those later planting dates, we will always say to ensure that you are meeting your RMA compliance for the last date for insurance. Otherwise, you run the risk of losing some coverage every day after that RMA cutoff. And then in the Southwest, kind of a similar sort of deal where we've got some different flex in that planting date. But generally speaking, in that Southwest zone, generally we'd be thinking anytime here after that April 1st, getting into May 10th to get that crop in, especially for the irrigated acres, getting them in earlier. But again, as I said, it would appear, especially with these newer hybrids, that we've got some more flexibility in our planting time.
Along with planting dates, what are some other factors of variability that growers need to or should take into consideration?
One of the other big factors that we think about here at planting time is our seeding rate. And so seeding rate recommendations from K-State are going to vary substantially as we move across the state. Starting out west, especially on that dryland crop, again, we're looking at anywhere from 14 to 20,000 seeds per acre in the Southwest, bumping that up ever so slightly to 15 to 22,000 in the Northwest, just an environment that has traditionally been a little bit more conducive to dryland corn. In the central corridor of the state, we're looking at 19 to 26,000, just bumping that seeding rate up to meet the yield potential in that central corridor. And then once we get into northeast and southeast Kansas, we start to separate our recommendations out a little bit more in the northeast, our medium versus high yielding fields. We're going to be tailoring that seeding rate to our yield potential. On our medium ground, we're looking at a 26 to 30,000 seeds per acre versus our high yielding acres, more of a recommendation around that 28 to 33. Again, making sure that we have enough plants out there in the field to meet the potential that exists out there to really make some high yields. In the southeast, we've got two different scenarios playing out here. We've got what we call our shorter season. Generally, that's, again, think about that early corn early I mentioned previously. In a short season scenario where our yield potential might be a little bit shorter, we'd be looking at 24 to 26,000 in this environment versus a full season where we are planting early, but we're going with a fuller season hybrid. We'd be putting more plants out there to meet the yield potential of a full season, more of a 28 to 30,000 in that scenario for full season. In all cases, we really encourage our producers to be mindful of your germination rate as you're making your seeding rate decisions. With resources from K-State, a lot of our stuff still assumes 58% germination. You may have bags of seed with higher germ rates than that. And in those cases, it takes fewer seeds to hit the same final plant stand because of that higher germ rate. So definitely pay attention to what that says there on your bag of seed when you're making that decision.
What in the corn seed factors in their germination, or is it just the conditions that they're being planted into?
Germination rate is a factor of a lot of different things. And so seed production in that way is actually highly regulated so that we have the best seed possible produced in environments where we have the highest likelihood of producing good quality seed. So it has to do with seed size. In some ways, larger seeds have larger reserves in their endosperm. That's starch. That is the energy behind that emerging seedling. And you get greater rates of successful germination as well as emergence in those larger seeds. But then it can also play in with age in some ways. So ideally, with some crops like corn, we don't like to let that seed sit around too long. Otherwise, as those plants age, seeds are still living. You can think of it as the egg. They are embryos of new life. And as they sit around without going on to develop into a new plant, they can eventually just lose their vigor, integrity. Now, there are some crops like cotton where actually letting that bag sit about a season sometimes actually can increase the germination rate slightly. But certainly with corn, the best larger seed, newest seed is going to give us the best germination rates.
Logan, Tina, I appreciate you both taking the time to join us today.
Thanks for having us,
Thank
Shelby.
you, Shelby.
Those were K-State Extension agronomists Tina Sullivan and Logan Simon. In today's show notes on agtoday.net, I will link an eUpdate article on this topic. We're cutting to a short break now, but stick around because we have more for you up ahead. You're tuned in to Agriculture Today, and we conclude our Monday show discussing a feedlot facts from the March ASI newsletter, and this is titled Relative Effect of Grain Type and Processing on Starch Breakdown with K-State Extension Beef Cattle Specialist Justin Waggoner. Justin, thanks for joining us today.
Yeah, thanks, Shelby. Appreciate the opportunity.
Justin, as we're thinking about grain type and processing on Starch Breakdown, what's a common question you get?
Yeah, so I think one of the things or a question that often comes up as a topic of discussion is, how different grains react to processing. Why do we process feed grains, right? And so there's some things there that we can talk about, and then, oftentimes there's kind of some surprises as we start to talk about how different grains respond to different types of processing. And so if we think about, feedlot growing and background in rations, there's a variety of different grains that are utilized, right? So corn, sorghum, even some wheat occasionally. But then within that, there's different processing methods. So, steam flaking grains is very common here in the western half of the state. On some smaller operations or grower backgrounder operations, a lot of times we'll not necessarily utilize steam flakers or steam flake products, but they'll use dry rolled grains, right? That have either been processed through a mill, and maybe that's done on farm. We also have high moisture ensiling of those grains. So high moisture grains, high moisture corn. And so those are all different processing methods that are utilized in the industry. And so, one of the simple questions that we get is, well, why do we process grains? And so the simple answer is to increase the available energy. And a lot of times that's related to the availability of the starch. That starch component is is really one of the primary energy sources within those different types of grains. And so, really with this article, we were trying to address that question of, well, where do different grains within different processing methods really kind of rank? And so some of the differences that we'll talk about here are really a function of how the starch is packaged within those grain kernels, and then some factors like the seed coat. Sorghum is really kind of the great example. It's kind of one of our grains that's maybe a little more challenging to process because of the berry size with sorghum, but also it has a very dense seed coat. And also we have a starch matrix within inside that kernel of sorghum that's also very tightly packed, if you think about that, relative to maybe a more softer grain like wheat or even corn to some extent. So as we kind of talk about those different grains and where they rank in terms of processing, a lot of these differences in terms of how they respond to processing is ultimately a function of the physiological characteristics of that seed coat, like on those grains. And so, if we think about, as we kind of go from in terms of starch availability and starch breakdown in the rumen, some of the slowest grains that we would see in terms of how they break down the rumen would be our whole shell grains. So whole sorghum, whole shell corn. And then as we move up the ladder in terms of availability, that's where we get to dry rolled corn, high moisture and reconstituted grains would be next up the list in terms of starch availability. Then we get into steam flaked grains like steam flaked sorghum, steam flaked corn. High moisture corn is also in that same category. So many times we can see similar starch availabilities on high moisture corn and steam flaked corn. So that's why you'll see many operations that do not have access to a flaker will oftentimes utilize high moisture corn and put that up in a bunker as a means of increasing the starch breakdown and energy available within that grain. Then we move into some of the fastest grains in terms of how they're degraded in the rumen. Those would actually be steam-rolled wheat and barley. So as we think about how the physiological characteristics of the seed coat of wheat versus sorghum or corn, right? We've got a softer grain, we've got a softer endosperm, and because of that starch matrix that's fairly soft, that increases that starch availability. And so actually dry rolled wheat and barley are some of the most rapidly fermentable grains in terms of starch availability within the rumen. And so a lot of times that's a bit of a surprise that dry rolled wheat actually has a higher rate of starch breakdown in the rumen than what steam flaked corn does.
Justin, I appreciate you taking the time to join us today.
Thanks, Shelby.
That was K-State Extension Beef Cattle Specialist Justin Waggoner. I will link this article in today's show notes on agtoday.net. That's all we have for you today on Agriculture Today, but we'll be back with more for you tomorrow.